Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day in the key U.S. financial markets. It is 7:25 a.m. Central Time, and I am recording this in preparation for the market day, January the 8th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in. And some pretty impressive overnight activity last night. All four of the broad market indices were up over 1%. The question today will be, will we get continuation of this overnight move, or will we run into something of an extreme of our overnight action and and start to consolidate, or even worse, if the bulls cannot hold on, do we start to fade? So very important to see what kind of action, especially coming off this near-term bottom, if we're able to sustain any kind of bullish activity, or if this just kind of peters out. The euro was down about 0.7% as of the snapshot time here, and gold was also down about 0.33%, so some changes there. Crude oil was up 0.35, so that one seems to have, at least for the moment, found some support. In the overnight, we have in the overseas markets, China down over 2%. This one's really been on a bouncing trip lately. It's been way up and then way down, really ripping over there on the Shanghai. The Nikkei up 1.67%, the DAX in Germany up 1.7%, and the FTSE also up 1.5%. So hopefully those very robust performances put in by Germany and United Kingdom will roll over into our U.S. market, and we will have something similar for our entire day. In terms of macroeconomic reports, our big one for the day is the unemployment claims, and that one is imminent. That one will be past us by the time you get to this video. The only other thing really is natural gas today, so if you got any specialists out there for natural gas, that is still in play for today. Notice that our short-term VIX is starting to fall. It's at a 17.59. We'll see where this goes today. I would expect if we have continuation that this would continue to fall pretty dramatically. Our historical IV percentiles have started to fall as well, and so these numbers have started to come down. But you notice the standard deviation moves, especially in the S&P. We've now had 5 days in a row where the S&P has had at least a 1 standard deviation move. It's been the most active of all 4 of the broad market indices. So pretty interesting activity going on there. In terms of our market timing, our primary call outs are, we still remain in this phase 3 bull flat. We've been threatening, in recent days to put in a lower low, but it did not happen. We have a higher low at this time. Question is does this bullish bounce follow through, or does it fall through and create that lower low? We are very much still market in correction, and from our active trader market posture, no new short-term bullish trades or intermediate-term bullish trades to be initiated is still the opinion. In terms of our portfolio trader position, still very reduced sizes given these conditions. But understand that these right here, these market trend postures and this portfolio position sizing opinions, these are focused towards the swing to core portfolio trader. And that siren going off is our unemployment report just posted. But anyhow, these are swing to intermediate term postures. and opinions that are related to those kinds of time frames. Now, if you go short term or very aggressive, obviously our 1 day and 3 day outlook are currently very bullish, and you know, if you were to look for sticking toes in the water, trying to take some initial early position in the most bullish of stocks, you know, you can do that, but you have to be knowing that you are being very aggressive, because our overall posture is still quite stressed with the market in correction. Indeed, if you look at the market forecast, I mean, the S&P borderline very bearish, Dow also really almost borderline very bearish. The Nasdaq is already in very bearish territory, and the Russell actually is the strongest of the four at this moment at a 57.4, but it's also in that borderline area to go very bearish. So not a lot to encourage somebody to be loading up the boat and putting on lots of long positions right now. You would definitely be taking on high risk positions to be super aggressive in your position sizing at this point. Our hedge warning status indeed is still at a 1+, market in correction. We have had our first kind of signal. Our VIX spike setup has fired a bullish signal, and as a result, that's kind of our first early look as to things might be setting a bottom. But clearly we've got lots of other reasons here to still be very cautious. Indeed, our VIX did actually fall below the volatility window, but there was day one within the window of acceptable VIX levels to conduct new option income strategies. So we don't usually change our opinion on the first day, but if you're a more aggressive trader, you might certainly look to be small size and very cautious, very tactical in terms of what you do, what kind of strategy you choose, and those kinds of things. So let's see. Oh, I wanted to get into some sectors. One of the things to take a look at here, if you're going to be super aggressive, well, where would you go with that? Well, market posture certainly has been consistently the best in consumer staples, healthcare, utilities, and retail. And probably retail and utilities, followed by consumer staples, would be the most appropriate places for sticking the toe in. Indeed, if you notice in terms of percent change, utilities and telecom were the only ones that were positive yesterday. There's a wash of red here for all these sectors in the most recent month, and you really are fighting the current conditions to be able to think that you're going to take successful trades and hit your targets in that kind of environment. From an industry group standpoint, we've got a little bit of reordering here, but still the same in the top 5. Retail, railroads, healthcare, internet, transportation would be where to go. If you like what you're getting here, as always, we greatly appreciate you following us on social media, you're liking us. Comments can be sent in on our Facebook page, or of course by email to support@falconglobaltraders.com, and you see the website. And as always, we do have 3 live trading rooms. 2-week free trials are available. And any of those 3 live trading rooms, we have an equity and ETFs room where we do core portfolio and swing trading. And then we have an options room where we do a number of more aggressive strategies, but also we do option income strategies, we do swing trades, we do earnings plays, and then we also sell core portfolio puts as well as speculative put selling in that room. And then of course for the day traders out there, we have the futures room, and Dana trades across 8 futures markets each day in that room for the day traders. Our disclaimers as always: if you need to have more time to read this, just hit pause. And as always, we thank you for being part of our Falcon Global community. We greatly appreciate your feedback and comments. Good luck, good trading out there. Be the fully aware trader.